Hey guys, Mike here. So I'll give anything that is rate sensitive, and oh boy, it was a good day for anything like that. We've seen this before where, yields will drop and these kind of stocks rebound and stuff, while you see like the S&P, the NASDAQ, and we'll get into all this, of course, and I'll show it to you. We're just kind of like, fluttering, flatlining all day long. But again, what was today? Monthly options expiration. We'll get into, it was a lot, by the way. And all this does, big expiration, right? It kind of lets volatility kind of do its thing. You hear people say dampening vol and things like that. All those options expired on Wednesday. Then you got the monthly options expiring today. And so next week will be interesting. We'll see where the chart gets, or the path gets charted, right? Because now market makers, they always say when you get these kind of 3 days going on, we got all these options expiring, market makers have something to do with it, right? The market does. That's just the way it is. But then it kind of frees up to go into next week to see, what is volatility really going to do? Are we finally going to get a spike in the VIX? Is that going to happen? Or are they going to keep dampening it, right? So that's what we got to figure out. Now, I'll tell you, again, we'll get in the charts, but man, this right here, $2.4 trillion in equities expired today. And you can see in the AM there, most of these 1.7 trillion on, and you can see 1.7 trillion are on the S&P right there. And then, of course, not to be outdone, RTY, which is actually tracks the IWMs, the futures for it. And then the NDX, 320 billion. So you can see S&P absolutely dominates, right? Every time you see this. And then you see in the PM over there what they were expecting. But the one thing that didn't get dampened is the bulls, right? 11.8, we showed that huge increase. You can see the bullishness actually increased by about 1 more %. And also the bearishness about 1 more %, but it was the middle that shifted over, I think, more to the bulls than anything else. But again, it's usually when you see this, kind of gets a contra indication or a contrarian indication, say, ooh, maybe people are getting too bullish. But when you're in one of these crazy, what do you want to call it, melt up, rally, whatever you want to call it, sometimes that plays out, sometimes it doesn't. We will hit a window of weakness here coming up, and maybe have more consolidation, maybe more pullback on that. Now, again, I know everybody talks about recession next year, and again, I think there probably will be one. Who knows how big it's going to be? But one thing it just keeps us afloat, right? And that's what I was talking about, people with appreciating assets. Those money market funds, man. like 24 billion in monthly income off these money market funds, and you can see we hit a new record high right here with money market fund assets around 5.73 trillion in money market assets. And so it's amazing to see how much is sitting in these accounts now. It's just absolutely insane. But when you look, you see what's even crazy. I found this today. Can you believe, and this is stunning to me, let me know if you got any different data, but it says share of mortgage-free homes in the U.S. is now at 39%. It's never been this high as far as we know. And that was just a stunning stat I read. This comes from the U.S. Census Bureau. And I read another one about how many people are buying homes with just 100% cash. And it was a very high percentage, like much higher than I thought, just because of the prices. I was stunned. You know what I'm saying? Now, speaking of cash, this is what I was going to show you yesterday, right? Why money continues to pile into these Mag 7s, push some of them to all-time new highs. And it's the cash, man. It is amazing to see. Apple, $162 billion, right? Total, just 11 stocks, 11 companies, 760 billion. And I'm saying this isn't straight cash. A lot of this is treasuries and stuff, right? And that's why they're drawing interest. I've showed you guys how Microsoft's making a killing, Google's making a killing off these higher rates and yields, right? And then you got Microsoft, 144 billion. Google, 120 billion. Just those three companies alone, 400 billion in cash and cash equivalents. That is an amazing thing to see, and that's why money's like, big money's like, hey, you're smart money, put it in there because it's safe. It's not like they're going to go under, right? And so, another thing to keep in mind is this right here. And before we continue, guys, please hit that like button there at the bottom. Give it a thumbs up. Helps people find the video. And if you like this kind of content, think about subscribing. I appreciate all you guys' support. It is Monday, and I'll go over this in Sunday's video, a lot more detail on this. But Monday, we're going to have a 20-year Treasury auction. I just noticed today when I was researching for Sunday's video. And so what does that mean? What have we had trouble with? It's the 30-year and 20-year Treasury auctions, right? That's what spiked the yields each time it's happened, right? Because it's usually showing weakness because people don't want to buy our long-term debt because they can still get a pretty good rate on the shorter term debt, and it's just in a way riskier, I guess you want to look at it that way, buying into 20 and 30 years, right? Just because of our deficit and our government's a hot mess, of course. But when you can get close to that yield, going 2-year, 5-year, whatever it is, I would go that way as well. But we have a lot of debt we have to sell, right? And so today, what'd you see, right? And this could be a different thing come Monday. That's at 1 o'clock, by the way. Mark it on your calendars. What do you see right here? Here's the sectors again. Do you see XLK up there? You do not see XLK up there at all. PSCT is a new one I got because I was doing a members video on small cap and stuff, and that tracks. It actually is the tech sector for small caps. It was actually green today, by the way. XLK for the bigger ones, it was actually red. You see the ones that were actually red today, even the Mag 7, right? And so, again, we're getting back to those. If rates are dropping, sectors that have been beat down are going back up, right? And so that was the kind of day it was. And when you look over at what I'm talking about, you can see QQEW, right? This is the equal weighted NASDAQ ETF we talked about. It was greener. It was up about 0.4% when the QQQ was barely up at all today. And then you got the RSP, which is coming into major resistance right here, but it was up higher than the S&P. And so, again, more breadth, right, in the market. Other stocks getting pushed up. They were hammered yesterday. And then you got IWM. Again, small caps were just nuked yesterday, right? But they came down that trend line, got the bounce, and they were up over 1.3% at open. And you can see it's right there in that gap. And again, this is how IWM moves. It trades like Tesla in a way, where it's like if it gets in one of those volume gaps, that's where it moves. We pull up the moving averages. You can see getting through those moving averages, that's the 200 and 100. That's going to be a beast. Let me tell you right now, I think that's going to be really tough for it because that's where we got rejected the day before, actually, when it got up there and then sold off the next day. But again, I'd love to see it come down, maybe that trend line, get that third bounce, start heading back up. And I'm still, I'll stay skeptical till I see follow through on this, whether or not they're going to keep trying to rotate in the small caps. But this is what I was talking about. The move isn't fundamental or anything. 40% of companies in the Russell 2000 have negative earnings. I've read a stat where 1/3 of them hadn't seen a profit in 3 years or something, right? And so, and you can see what happens in recessions, right? I mean, it really goes up, really, and it's gotten worse over time just because there's just a lot of garbage companies, and I guess it's just easy to bring companies public and people will buy the stock and everything. That's my only guess. If you have a better explanation, let me know. But this goes back to 1995, and you can see that is what we call an uptrend. So those percentages of stocks with negative earnings, it just keeps increasing. A lot of these are called zombie companies, right? And how a lot of them are still in business, I don't really know, but it is what it is. And a lot of them have gained back all their 2020 gains, by the way. These are these meme stocks they were pumping up. Now, another rate sensitive area is genomics, right? And if you may not have noticed, genomic stocks have been absolutely just on fire right here. You can see ARCG. And again, it's getting that volume gap right there. So it's going to continue to move most likely. Let me kind of pull out, get a better look at this. Yeah, I mean, probably going up to 28, 29 right there before you start hitting heavy resistance. And again, those moving averages will probably be a beast to get through for sure. But it's up 26% in a very short amount of time when this rally started. And genomics are definitely rate sensitive for sure, right? And so there's a lot of research had to put into something, and you may get no money out of it. So, and this is one of those sectors people pumped up, but what people don't realize about genomics, I think, honestly, is if you start solving problems with genomics, that means you don't have to buy any pills to pop, and that's not what Big Pharma wants. So you just kind of keep that in mind. And then when you look at, PacBio, same thing. I believe this is in the ARCG fund, if I'm not mistaken. Huge move up, going into that volume gap right there, above its 50. Now, if you look at the regular indexes, what are they doing? Mainly just consolidating over the last 3 days, right? Setting at major resistance around that 4,500 for the S&P right there. You got that gap above. If it gets above that and goes in that gap right there, it's definitely going to go to 46 pretty fast, I think, honestly. And you'll have that gap right there, the RTH gap, regular trading hour gap, from back in August, which can be a draw on it right there. And again, I mean, you got a lot of gas below, right? But do they have to fill? No, I'm going to go more into that in tomorrow's video for you guys. When you look on the weekly, there's your all-time highs up there. And I think, no doubt 600, whatever it is, that's going to be a beast, I think, to even try to get through. I think we definitely get rejected when we get up to that area. If we get to that area for the rest of the year, we'll see. But yeah, that's going to be a beast, I think, to get through right there. Now, when you go over to the NASDAQ, Same thing. 1, 2, 3, basically 3. You can count it 4 days of consolidation right there. And again, we don't know if it's accumulation, distribution, is it just gearing up for the next move up, or is it gearing up for a move down, maybe to fill one of the gaps. That's what we'll have to see. Again, above all the moving averages, RSI, I mean, are we getting in overbought territory? Sure, but it can stay that way. And I'll kind of detail on this more in tomorrow's video and stuff when we talk about those gaps and stuff and the thrust and the breadth in the market and that kind of stuff. For sure. And if we kind of pan out, there's another one on the weekly. You know, you look over there, it looks like the S&P. The difference in this one, though, this one actually has fair value gaps that it can draw up on, right, to try to mitigate, like the S&P doesn't. And so that's why the NASDAQ's been the stronger of the two, really, because, I mean, tech's what's been running everything, even with this extra breadth. I'm going to put a resistance line right there, like 14,400, because, again, it's kind of equal to where the S&P has to get. And I think it's going to be a beast to get through right there. That's what we rejected last time when we tried this run up. Now, Tesla, nice recovery today. Big sell-off yesterday. Dip buyers came in, pushed this one up, filled one of the gaps and stuff. And you can see, I mean, as we pan out here for sure, you know, this one right here is in the volume gap. And I'm going to pull this RTH gap over because that could be a draw for it coming next week. But you can really see, we'll talk about this more in Sunday's video when I go over this, but you got this gap that didn't quite fill below. You got a gap above. You're setting in a volume gap right now with another volume gap right above it. Okay, and so if bulls start coming in, you see call flow coming in, you know, definitely heading up to 245 again. For sure. But we just got to see if we're going to start keep wedging in there, and we'll talk about that more on Sunday. Now, Shopify, again, that trend line got tested twice. Boom, finally exploded through. So this one likes to go to 70. And so that's pretty much where it's heading, I think, at this point in time. And, you know, again, when you look back, hugely damaged chart. I mean, this thing is down by a country mile from where it was in 2021. But this trend line right here is going to be good resistance for it, along with another resistance line. So I think that 70, 71 area is going to be just really tough if it even gets there to try to get through. And that trend line goes back to, I think, 2018. If you can see it right there. Actually, 2018. So you can see multiple times it was support, then it turned into resistance. And so until proven otherwise, that is going to be resistance as well. So some confluence right there to see. And so we'll probably get a very nice rejection off that. We'll have to see. Now, Palantir is an interesting one. So like we talked about, filled that gap, is peaking out of what was a supply zone, right? So now you look at this, we go to the weekly, and you can see just how it's moved to the left. It's in that volume gap, like we talked about. If it gets in the volume gap, it can move to 24, 25 pretty quickly. As long as the market starts heading back up, to maybe fill one of those gaps, and then it'll see quite a bit of resistance right there for sure. But if AI stocks continue to pump, and a lot of this will depend on what? NVIDIA next week. We're going to talk a lot about that in Sunday's video because that's the AI king. If that falls, all AI stocks are going down with it. You can almost guarantee that. But if it ends up coming in again and heading to probably, 600 or something, then that's when you're going to see Palantir and a lot of the stocks, I can just name them off, are absolutely going to continue that AI. Because you notice how the AI kind of pump is kind of died out, right? It was like, oh my God. They went, a lot of them came back down to earth. And it's like I said they would. They came back down to earth. And it was like, oh, okay. Because we started seeing stocks that aren't monetizing it, and then the stocks that are monetizing it already, right? Which is your chip companies and stuff like that, and a Palantir and things of that nature. But a lot of them just said, oh, we're AI, please. And they said, on earnings, what are you monetizing? Well, nothing really. You know, and so again, we'll see who the pretenders are and you know who the real deal is and stuff. But we'll get a lot more into NVIDIA and the chart and everything on Sunday for you. Tomorrow we'll get into all your questions and stuff. And I even got, like, if you ever DM me or send me an email, I won't put your name on the question. If it's an email, I won't even record that part. I'll just read it off the computer and stuff. If it's a DM, I'll just record the question part for you. But if it's in the comments, I mean, of course, it's a free game. I'm just going to put it on there. And soon put your name because everybody can already see it. So we'll get to those tomorrow and stuff. And remember, next week is what? A short week. So we got Thanksgiving on Thursday, which market will be closed, and then a very short day on Friday. And so I'm going to go and find some information for us about how Thanksgiving week usually works out and see what kind of data I can find on it for us. So anyway, hope you guys got something out of this. Please hit that like and subscribe button. Hope you guys have a wonderful weekend, and I will see you tomorrow.